I can calculate the motion of heavenly bodies, but not the madness of people. Just let that sink in for a second. These are the words of Sir Isaac Newton. I mean, this is the guy who literally wrote the book on gravity and motion. He gave us the blueprint for the entire universe. This idea that everything is rational, predictable, kind of like a giant clock. And yet there was one thing, one force that even a mind like his just couldn't crack. Something too chaotic, too unpredictable. And this number? Well, that's what that chaotic force ended up costing him. 20,000 pounds. Now, back in 1720, that wasn't just a lot of money. It was an absolutely staggering fortune. We're talking millions of dollars in today's money. All of it just gone on one terrible, terrible investment. So that's the big question we're going to unpack today, right? How on earth did the man who basically invented rational thought get so completely swept up in a financial frenzy, a frenzy that didn't just wipe out his own money, but actually shook an entire nation to its very core? This is the unbelievable story of the South Sea Bubble. It's a wild ride through genius, greed, delusion, and really the anatomy of the world's very first massive stock market crash. Okay, let's get right into it. To really understand how a guy like Newton could lose so much, you have to know who he was at this point in his life. He wasn't just some reclusive scientist. He was a man with serious power and money in 18th century London. See, by 1720, Newton wasn't just scribbling equations in a dark room. No way. He was the master of the mint, a seriously powerful and very profitable government job. He was a pillar of the British establishment, a super wealthy guy with a net worth over 30,000 pounds. And he had this reputation for being a really careful, really shrewd investor. Honestly, he was the absolute last person on earth you'd expect to get tangled up in a financial scheme. But here's the thing. Newton's story is just one tiny piece of a much, much bigger picture. It's really a story about an entire country that was absolutely desperate for a financial miracle. To get why the bubble happened, you've got to feel the pressure that was building at the time. So in the early 1700s, Britain is this rising star on the world stage, right? But it has this huge, dark secret. It's basically broke. Decades of incredibly expensive wars had left the government with this giant mountain of high-interest debt. The country needed a game changer, and it needed one like yesterday. And then this company comes along with an idea so bold, so brilliant, it felt like the answer to everybody's prayers. It was called the South Sea Company. And their pitch was kind of simple, but totally audacious. They said, hey, we will take over Britain's entire national debt, all of it. In return, just give us an exclusive monopoly on all trade with the legendary gold-stuffed Spanish colonies in South America, what everyone called the South Seas. And their sales pitch was just perfect. You can see it right here. For investors, they were promising a slice of the mythical gold and silver mines of South America. They even got something called the Asiento de Negros, which was a monopoly on the horrifically profitable slave trade. For the government, it was like a magic wand that would make the national debt vanish. And for the regular folks, it was sold as a patriotic duty, a chance to get rich while saving your country. I mean, how do you say no to that deal? It was a win-win-win. So the idea itself was completely irresistible. But look, an idea is one thing. To turn that idea into a full-blown national obsession, well, that takes a certain kind of genius. Or, maybe a certain kind of villain. Let me introduce you to John Blunt. He was a director of the South Sea Company, and he was the real mastermind behind this whole thing. Blunt understood something really fundamental about markets. They're not just driven by logic, they're driven by stories. And boy, was he about to tell the greatest financial story the world had ever heard. And this is the plan in a nutshell. It was deceptively simple. Here's how it worked. The government owed money to thousands of people holding its bonds. Blunt's big idea was to convince them to swap those safe but kind of boring government IOUs for exciting shares in the South Sea Company. The thinking was, as the company's monopoly brought in all these riches, the value of the shares would just explode. Bondholders get rich, the company gets rich, and the nation's debt magically turns into super valuable stock. On paper, it looked totally foolproof. And if anyone out there still had any doubts, this next move just blew them all away. In 1718, the King of England himself, King George I, becomes the official governor of the company. I mean, think about that. It was the ultimate celebrity endorsement. Investing in the South Sea Company wasn't just a smart business move anymore. It was royally approved. Public confidence didn't just grow, it went completely supernova. So now all the ingredients are there, right? You've got a desperate nation, a story you can't resist,
and the king's seal of approval. With all that fuel, the market didn't just get hot, it burst into flames. This is the point where rational investing just goes out the window and pure, unfiltered mania takes over. Just look at this chart. It's insane. In January of 1720, a share was trading for about 130 pounds. By August, that's only 8 months later, it peaked at over 1,000 pounds. This wasn't growth, this was a rocket ship, and everybody wanted on board. I'm talking people from every walk of life. From dukes and duchesses to their butlers and maids, were all scrambling to buy in, totally convinced they were about to get rich fast.
Now here's where they got really clever. To make sure all that speculative cash was flowing in only one direction, theirs, John Blunt and the directors used their political muscle to get Parliament to pass something called the Bubble Act. This basically made most other publicly traded companies illegal. They essentially created a monopoly on speculation itself. Genius, right?
And this brings us full circle, right back to Sir Isaac Newton. This timeline tells his whole tragic story. He was an early investor. In April, being the rational guy he was, he looks at the market getting super overheated and he does the smart thing. He sells. He cashes out, doubles his money, makes a cool 7,000 pounds. A great move. But then he had to sit on the sidelines and just watch as the stock kept going up and up and up. All his friends were becoming insanely wealthy. That fear of missing out, that madness he talked about, it just became too much to handle. In June, he couldn't take it anymore. He jumps back in with both feet, putting a massive chunk of his fortune in right near the very, very top.
A stock that goes up that fast, built on nothing but pure hype, well, it can only end one way. And as we all know, every single bubble eventually has to pop.
And when the South Sea bubble popped, it wasn't a slow leak. It was a violent, catastrophic explosion. The selling started in September, and then the panic set in. You can see it right here. The price just craters. From over 1,000 pounds in August, all the way down to 124 pounds by December. Entire fortunes that took a lifetime to build were just gone in a matter of weeks.
And here's the ugly truth of why it all fell apart. The entire company was a house of cards. That legendary South American trade, total fantasy. Spain only let them send one ship a year and took a huge piece of the profits. The company never made any real money from its monopoly. So where were those huge dividends coming from? Well, they were paying the old investors with cash from the new investors. Yep, it was a classic Ponzi scheme, all held together with massive bribes to politicians to keep the party going.
The crash was bad enough, but the political scandal that blew up afterwards was just as massive. The public was ruined, and they were absolutely furious. They wanted someone to pay.
And oh, they found plenty of people to blame. Parliament, facing immense public pressure, launched this huge investigation, and what they found was just shocking. Rampant insider trading, totally fake accounting, and this huge web of corruption and bribery that went all the way up to government ministers and even the royal household.
And this time, there were real consequences. Look at this scorecard. John Blunt, the mastermind, had his massive fortune seized. Other directors were financially ruined. The corrupt politicians, they were disgraced and tossed in prison. And here's an interesting twist. The whole crisis paved the way for a new leader, a guy named Robert Walpole. He rose to power by cleaning up the mess, and in doing so, he basically became Britain's first ever prime minister.
And so, that brings us right back to where we started, with Newton's impossible problem. He could figure out the precise, predictable movements of the entire universe, but he couldn't predict the chaotic, irrational mix of greed and fear that drives a financial bubble. So here we are, 300 years later, after dot-com bubbles, housing busts, crypto crashes. You really got to ask yourself, are we any different? Have we finally figured out how to control the madness of people?